So let's raise the big questions right at the very top tonight. Will this global recession deepen as the IMF now suggests? Can India really fight the global headwinds and be isolated from them? Are rate hikes the only way to tame inflation? What are the challenges that lie ahead? Joining me now are economists and economic watchers from across the world. Jonathan Perrotin joins me from the United Kingdom. Taimur Baig is Chief Economist and Managing Director at DBS Bank in Singapore. Ajit Ranade is a leading economist with the Gokhale Institute here in India. I'll also be joined by Prasenjit Basu, Chief Economist, ICICI Securities here in India. Appreciate all of you joining us. Let's first get a look at the global picture. Taimur Baig, what's the picture you get a day after the IMF suggests that the global recession could deepen? Is there a sense that at least in the short term, the next 3 to 6 months, things will get worse before they get better?
There are two ways of thinking about it. From a global markets perspective, which is what I do on a day-to-day basis, clearly the prognosis is not very good, whether it is you're looking at it from the perspective of the fixed income investor who is holding bonds in which there might be losses because rates are going up, or from the perspective of an equity investor who will probably not be able to see very strong returns from their equity portfolio because, again, of this slowing growth, rising rates narrative. But that's the market side. Some people care about that, but maybe lots of people don't. Then there's the economic side where we are talking about jobs and inflation and wages, where at least the cue from the US is the Federal Reserve is not going to relent till there is some crack in the labor market, there is some softening of wage upward pressure. That's not happening yet, and hence rate hikes likely to continue. 75 basis points in the November meeting, perhaps another 50 basis points in the December meeting. And we have to sort of reckon with that sort of dynamic. High interest rates, unlike we've seen anything like for about 15 years.
Jonathan Perrotin, do you also see that at least in the next couple of weeks, particularly in the United Kingdom, which seems the most hit at the moment, among the most hit by the global economy, things could get worse given the energy crisis?
Yes, the United Kingdom and other parts of Europe generally have been hit particularly badly by, as you were saying in the introduction, by the energy crisis, which is both putting downward pressure on economic activity but also putting upward pressure on inflation. Faced with that, central banks in Britain as well as in the United States have been raising interest rates. As you said in the introductory piece, if interest rates go up, particularly in the United States, that tends to put upward pressure on the dollar relative to currencies like the Indian rupee. And so a country like India is hit by a slowdown in the global economy, but also upward pressure on interest rates, upward pressure on prices. Again, as you were saying in the introduction, as the rupee falls, that would tend to, unchecked, raise inflation in countries like India as well.
So in a sense, therefore, Prasenjit Basu, Chief Economist at ICICI Securities, we've already seen the World Bank slash India's projection between July and October now by 6.5%, the latest number. Is this now a reality we must face, that we can't be fully isolated from what's going on across the world? There's been a sense that, look, we are relatively better off. That's the general impression the government gives. Having said that, do you believe that we need to, in a way, now look at the situation with a little bit more concern, given that this global recession appears to be deepening?
Well, first of all, the global recession hasn't yet hit. If there is a recession, we have stagflation in Europe, including the United Kingdom, but the United States is still growing. I mean, the U.S. economy is still doing well as far as the labor market goes. If you look at the labor market, they're still adding jobs. So the U.S. is not really in recession yet. The recession is still to hit. I'd say it's about 2 or 3 quarters away. But India is a relative island of calm in this global storm. India, yes, the growth rates have been reduced, but India is still going to be growing over 7% in the current fiscal year. That is easily the fastest growth rate in the G20. There is in the G20 another economy that is doing very well, and that is Indonesia. Indonesia is is a commodity exporting country and is in robust health as well. But with the exception of India and Indonesia, across the G20, the 20 largest economies in the world, those are the two islands of relative stability. Elsewhere, you have a really difficult period ahead, and basically the United States has made a massive monetary policy error, and they're having to correct that rather aggressively now. And as they do that, they are driving the U.S. economy into a recession by the middle of next year. So the prospects are not great for the world economy, but within that, I think India's strength is that India has deleveraged both internally and externally. If you look at external debt, India's external debt as of June this year was up just 38% relative to March 2014.
Yes.
So that's a very modest increase, not even the same sort of pace of increase as nominal GDP over that period. In the previous 10 years, 2004 to 2014, India's external debt had increased by 296%. So, so we've deleveraged. We are now deleveraged externally. We've deleveraged domestically. Nominal loan growth has barely been 9% on average every year for the last 8 years. So very, very modest loan growth. The economy has deleveraged domestically and externally, and as a result, India is in relatively good shape. You're able to deal with this crisis a lot better than most other economies.
You're saying India and Indonesia stand out relatively better off, but Ajit Ranade, when I look at those economic headwinds, the fact is inflation remains a concern at the moment in this country. Interest rates are continuing to rise to tame inflation. Private investment is still relatively dormant, and non-tax revenues are below expectations. So there are concerns. How much do you think those concerns will magnify, particularly as the government now looks at the budget making of 2023 and the year ahead? Will we have to now look very closely at some of those growth projections that were made 6 months ago?
Yes, Rajdeep, India cannot remain completely immune from the fact that most of the world is going to be in a recession. Even the USA, as was mentioned earlier, it's looking 50-50, but as months go by, the chances, I think, will increase. So one impact of that is that high oil prices directly translate into higher fertilizer subsidy. Last year, we budgeted 1 lakh crores for this year, that is this fiscal year, in January, but now it's double. Now the estimated fiscal burden is 2 lakh crores. We already have had to revise upwards the budgetary allocation for the National Rural Employment Guarantee Scheme. We have allocated some 45,000 crores extra for the free food, the PM, the free food scheme till the end of December. So the fiscal arithmetic will start mattering. Of course, just a few weeks ago, the finance secretary said that he's confident of reaching the fiscal deficit target this year because of advanced tax collection numbers and the fact that the GST numbers have been above 1.5 lakh crores for 6 months, 7 months in a row. But that was before this, the oil price, the OPEC has decided to cut output, so oil prices have gone up again above 100, and the impact on this free food gain. So the fiscal arithmetic is going to be difficult. Having said that, I must say the growth inflation dynamics of India, that is the combination of tapering growth, lower growth, and slightly higher inflation, this combination is looking much better than most of the other peers. Our inflation at 7 or 8% is only slightly above what we had anticipated earlier, and our growth rate has been revised downwards, but from 8 to maybe 7 or maybe 6.5%, which is not so bad considering that the rest of the world is in recession. But it's not something to be complacent about. And, as earlier it was said, India's situation in terms of its debt to GDP ratio or the external debt to GDP ratio, all those are somewhat more comfortable, of course, compared to 2013.
Therefore, Dr. Beg, from your vantage position in Singapore, do you believe India and Indonesia are the two outliers, the two countries that stand out in a way, particularly among the G20? Would you also say India relatively better placed in a way at the moment? Or would you say that it would be premature to celebrate in any way at a time when there are these global headwinds?
There is absolutely no room for celebration at this point. We're talking about a country where over the last 5 years, real per capita income has been more or less stagnant. It was, in nominal terms, about $2,000 5 years ago. Today is about $2,200. So the country has a lot of work to do. It has lost about half a decade. Some of it is due to global factors. Some of it is due to, forced formalization, which caused a lot of friction in the economy. And therefore, per capita income has been largely stagnant. And there's a very large informal sector in India which is struggling mightily as we speak, even though I think one must take into cognizance that the formal sector of the economy seems to have shed off a lot of weight and is looking vibrant. But that is not all of India. There's a large part of India where day-to-day increases in oil price and gas price and food price has a disproportionate impact on people's well-being, which will arguably become even more challenging in the coming years, even if some of the debt metrics and growth metrics please the markets and Indian equity markets do well. There is a broader India to talk about, and therein lies the challenge. How do you take care of everybody, not just the part that is beta to the stock market?
You want to respond, Prasenjit? Basu, you were shaking your head as Dr. Beg was suggesting that those are the real concerns at the moment. Real incomes are not rising. There are genuine concerns. Even service sector, which was doing well, September figures not so good. Are you worried about incomes remaining stagnant, Dr. Basu?
Yeah, well, first of all, I think it's important to understand that India has been through, of course, a very difficult period with COVID. But if you look at...
but it's not just COVID. It's not just COVID. From demonetization post-2017, we've had a difficult time.
No.
Look at growth numbers. Look at GDP numbers.
By the way, let me just point out that real GDP growth per capita between 2014 and 2019 was the fastest of any 5-year period in India's history. So that is simply a fact. Perhaps Taimur can look up the data as well. But that is simply a fact. 2014 to 2019, per capita income grew at a faster pace during that 5 years than during any previous 5-year period in India's history. Now,
from 2017 to 20, just a minute, from 2017 to 2020, we had about 9 quarters of declining GDP. Go ahead.
What? Declining GDP? You're living in some
in terms of
in an alternate universe.
Growth rate per quarter between 2017 and 2020 registered a constant decline. The fact was that it was pre-COVID.
Pre-COVID, there was 1 year of deceleration, but during that year, 2019-20, India was still growing faster than all of Asia except China.
Right.
And last 2 years, India has actually outpaced China by quite a lot, and India is the world's fastest growing economy. So let's just get the facts at least in place before we start arguing about other things. Now, with regard to the fiscal points that Ajit Ranade made, let me just point out that this year, if you look at corporate tax revenue, personal income tax revenue, and GST revenue, the 3 biggest sources of tax revenue, they are growing at a far faster pace, all growing over 25% year on year in the first 5 months of the fiscal year, much faster than projected in the budget. And as a result, the fiscal position, if you look at net market borrowing by the government in the year to date, it is growing much slower than was expected in the budget. So as a result, in fact, India is fiscally in a much better position than was expected even at budget time.
Right.
Now, as a result, I think we are going to see a revival in private investment spending. And in fact, that is already coming through. There's lots of evidence of private investment picking up. Of course, your magazine has just put out a good report on the lack of private investment spending, but this isn't true just of India. Across the world, private investment has been weak for a decade.
The word we've used in that report is dormant. Private investment remains dormant. Private investment at the moment remains dormant. That's what we've said.
Investment spending is picking up. if you look at the GDP data, real investment spending is up strongly in each of the last 3 quarters. So we are beginning to see the first evidence. Now, if you look at, if you look at major corporates, they've been announcing, for instance, just one company, ArcelorMittal, is talking about investing in a single state in Orissa, 24 million tons of new steel capacity. That would be a 20% increment on India's steel capacity at the moment. Just one company. If you look at the announcements from Reliance, there's a massive investment. Just 2 weeks ago, the Economist magazine talked about the $90 billion investment plan of the Tata Group. So there is, in fact, a widespread positivity in the corporate sector. They are looking to do a huge amount of investment. And it's not, this isn't pie in the sky. This is actual stuff that is coming on, that is about to come on stream.
Let me take what you are saying to Ajit Ranade, because Ajit Ranade, there is, as Dr. Basu suggests, there are some straws in the wind that suggest the worst is certainly over, that we are moving faster than other parts of the world, and therefore there could be, while the finance minister is calling on industry to revive the animal spirits, there are some hopeful signs. Do you believe that given what is happening across the world, therefore we remain better placed? That's the best way to see the situation at the moment? Or do you believe that there will be these global headwinds that will particularly affect the capacity of private investment to further go in for major projects, that the informal sector in particular is something to be worried about?
Well, Rajdeep, as you know, the finance minister in a very recent interaction was exhorting the Indian industry in India Inc., saying, why are you guys not investing? So clearly she is not satisfied with the rate of investment spending that Mr. Basu is saying. And I think investment spending to GDP, especially private sector investment spending, is not growing vigorously at all. A few projects that he mentioned, of course, maybe in the offing. But the fact is that investment spending is not growing the way it must grow. Secondly, we might be very well seeing the K-shaped problem that we saw last year. Basically, the high-end corporates are doing very well. In fact, high inflation in the economy, relatively high inflation, is benefiting, the metal sector, is benefiting the, FMCG products, consumer products. But the K-shaped recovery, a very stark example of that is high-end vehicles like luxury cars or SUVs are doing very well, whereas the two-wheeler sales, scooter and tractors, are below their pre-pandemic levels still. So their growth is very tepid. So this is the way to combine these two views, that it's no doubt the advanced tax collections by the corporate sector, which is enjoying higher profitability. Banking sector is enjoying higher profitability, but that's to the organized sector. But the large unorganized sector and the informal sector is really, really struggling. In the SMEs, the small, micro, medium enterprises, out of 63.5 million enterprises, more than 95 or 98% are small, micro, medium.
Right.
They are hurting for sure. And you have seen the job data on the jobs is not so, I don't think we can be complacent. We might be seeing good news. We have the second richest person in the world, the second most wealthiest person in the world from India. So of course there is a cause for celebration, but we must recognize that we must be seeing a much more pronounced K-shape. Why do you think we are running a free food grain program for 800 million people for 33 months? Surely if the economy is doing so well, we shouldn't have to be providing free food grains to 810 million people for such a long time. Because I think there is a concern that the bottom part of the economy, they need help, will probably need much more fiscal help in times of, because of higher food inflation. But however, hopefully the tax collections because of the organized sector will help the fiscal arithmetic of the government.
Yeah, but income inequalities, Jonathan Perrotin, is now a global issue. I see a lot of commentary in your country, in the United Kingdom, also about the concerns over growing income inequalities, and that going ahead, particularly with high inflation not being tamed, especially in Europe, must remain a global concern. It's not just India. These problems, whether it's inflation, income inequalities, are global problems today.
Yes, of course, it's a global concern, and particularly with this bout of inflation, because in contrast to earlier periods where inflation was associated with a sort of wage price spiral and ordinary workers were in a position to defend their real incomes by raising their wages. That's rarely the case today. So we see inflation often particularly hitting lower income groups. And we're struck by the earlier discussion when we were talking about GDP. There was a tart comment made some years ago in Britain when somebody said, what's happened to GDP? And a member of the public turned out and said, whose GDP is that? We always have to be cognizant of the fact that these aggregates of what's happening in particular economies often conceal what's happened to different groups, and we've already commented on this in this discussion, particularly the differences between what's happening in people working in the formal sector and the informal sector in an economy like India and similar ones.
So in a way, it is those at the bottom of the pyramid who are the ones who would be perhaps most concerned at the moment, given what's happening. The informal sector remains the big concern. But Dr. Beg, a quick word on the rupee itself. You've been tracking the rupee for years. Do you believe we should be concerned at all as we climb below 82? Or that, in a sense, is part of what's happening across the world, particularly in the United States? And India, in that sense, still better off than many other countries.
Right. So I don't think India needs to worry about this issue as much as it would have had to worry about, say, 7-8 years ago when the external buffers were far less adequate. Having said that, I think we're entering into a rather precarious time as the year sort of draws to an end. We've seen very large currency volatility among the developed market currencies, the pound, the euro, the yen, the Korean won. That is beginning to infect the Chinese currency, and as the RMB heads towards 7.5 to the dollar and beyond, I fear that a wave of competitive currency depreciation could materialize in Southeast Asia, and that could spill over into India. So we need to watch out for that. It's not just a question of whether one is relatively better than the other. It's also one's absolute well-being that might be at stake if there is a round of competitive devaluation around the world.
So how low could it go?
I wouldn't want to comment on that. I mean, you may remember, like 8-9 years ago, I got in very big trouble by trying to forecast the level, which did materialize, but it was not a good thing to do. No, I think in this particular case, it's not about the fundamentals anymore. It gets overtaken by contagion from global markets, and whether it is 82 today or 83 tomorrow, it is one of those things that is not really a function of the fundamentals. It's very hard to actually call a level in that.
I just have a minute on the show. Dr. Basu, if there was one thing, one red flag that you want to flag off, you are much more buoyant about the way where India stands, but if there's a red flag, is there a red flag that worries you?
Well, obviously, oil prices are obviously a factor that can destabilize things. But basically, if the global economy is slowing down, it's very unlikely that oil prices will rise very much. I think one other point that I'd just like to make is that labor market reform is making progress in India, and labor-intensive manufacturing is India's potential salvation. So the labor market reforms that have been put in place, what I would really like to see is that they need to be notified. The reforms have been passed by Parliament, they've been signed by the President, but they haven't been notified yet. So once they're notified nationally, then you can begin to see a significant amount of investment in labor-intensive manufacturing that lifts up employment and generates really much faster growth.
Because, Ajit Ranade, the PLIs, the production-linked incentives are being seen by the government as its way of getting manufacturing kick-started, of taking the opportunity of a slowing China, of the United States in a way, in a bit of a crisis, and Europe certainly deep down in recession.
But Rajdeep, the fiscal allocation to PLI is like 3 or 4 lakh to a corporate sector which is already doing well, and we are not seeing that kind of investment, by SMEs and across the board. So I think the government will have to carefully look at how much subsidy further, because when it's given to large corporates, it's called incentive. When you give it to the poor, you call it subsidy. But it's a huge amount. So I think the year ahead is going to be, you'll be very careful how to calibrate the fiscal math. I mean, on one hand, we are saying the tax collection is good. That means the corporate sector is doing well. And you're giving them PLI in addition. Of course, PLI has to be very strategic. It has to be in sectors where we'll get good, robust activity. Just having 1 million or 2 million iPhones manufactured in India doesn't mean it's catering to 600 million market. So it's going to be tricky. I mean, this is a difficult year. the fiscal arithmetic is going to be tricky. But as I said, India's inflation growth dynamics is much better, in much better shape. And if we get, if we don't go fiscally much more, what should I say, spendthrift, we might actually come up okay next year, as Prasanji said, if the oil prices come down.
Let me just get a final word from you then, Mr. In the United Kingdom, do you believe that the Ukraine war, Jonathan Perrotin, will decide the longer the Russia-Ukraine war continues, the world will remain in this state of global uncertainty?
The longer it goes on, the worse the uncertainty is. But picking up on what was just said, we have a global economy, and there is the potential, as we all discussed, for currency conflict within this. In the 1980s, the then G5 came together to try and manage these things and to avoid destructive conflict. And I think there's a case for the G20 to try and come together and avoid the potential currency conflicts between countries that we were discussing earlier, in a sense, particularly if the Ukraine war goes on, but even potentially if it gets solved.
There. I appreciate my guests joining us. Always so much better to have fine minds from the world of economics joining us to talk on these issues, rather than politicians screaming at each other with their partisan perspectives. Thanks very much for joining me here on the news today.